What's up, everyone? Alberto Pau here, and today I'm going to give you a very different take compared to what I usually do. I'm going to give you a different take on the Forex markets that's going to start with the equity markets. And why? Well, despite all sorts of geopolitical tensions between the top two superpowers, Russia and the US, and North Korea, Ukraine, Syria, etc., we are sitting here in perhaps one of the longest bull markets in history. Check out this chart of the S&P 500, arguably maybe the world's leading equity market, right? We are in this very long bull run, and we have been in this bull run since about end of 2009. Okay, so since we kind of started coming out of the credit crunch, we have been in this uninterrupted bull market, and we are bound to see a correction. Okay, now, is this correction going to happen tomorrow, next week, next month, next 6 months? I don't know, but there has to be a correction. This is, in my opinion, an overextended bull market. Now, why is this important for you as a Forex trader? Well, Forex markets are largely driven by the equity markets. Why? Because when people buy and sell equities, there is always an element of a Forex transaction, right? For example, if a European investor wants to buy US equities, then he will have to buy dollars and sell euros, right? So the equity markets and the Forex markets always go hand in hand because of this very close link. As we see the crash or the correction in the equity markets that's coming, what's that going to mean for you as a trader? If you've attended any of my trainings, you will know by now that it's always the higher time frame over the smaller time frame. It's always about what is the market doing overall, what is the major trend in the market, and that's going to be predominantly, okay, a lot more important, okay, than the specific trade setup you're looking at. And if you've attended any of my online trainings, you will know this, by heart by now. It's always about what is the market doing, and then you look at your specific trade setup, and if you're in a bull market and your trade setup tells you to buy, then you go ahead and place a trade. Okay, you always have to make sure that you're going in line with the market, in line with the overall market trend before you go into the market. So as we see the correction in the equity markets, what do I expect to see? Well, I do expect to see a strengthening of the US dollar. I expect to see a strengthening of the euro, an appreciation of gold. The Aussie dollar and the Kiwi dollar may weaken, actually, because they are seen as kind of more riskier currencies. I expect the Canadian dollar also to strengthen because Canada is one of the world's largest gold producers. Obviously, we're also going to see a strengthening of the Japanese yen, which is also seen as a safe haven asset. Okay. As a matter of fact, this is also a very interesting chart. So what we have here is in green the S&P 500, same as before, and then here in red we have the dollar index. Okay, so essentially as the red line goes up, it means that we have a stronger dollar, and obviously as the green line goes down, it means we have a weaker equity market. Well, look at this. It's very interesting how we have a near perfect inverse correlation between the strength of the dollar and the equity markets. Okay, as the equity markets are low, and we're looking here at the credit crunch 2008-2009, we see that the dollar is very, very strong. As the equity markets recover, okay, then the dollar weakens. Here again, equity markets are on the way up, dollar is on the way down. Okay, the only part where this correlation, this relationship broke was around here. And now, if we look at the kind of 2016-2017 periods, you can see how the correlation is back on track. Okay, strong equity markets, weak dollar. Here, right, we are at all-time highs in the equity markets, and we are looking at a very weak dollar. To sum things up, equity markets at all-time highs, expect a correction. As that happens, expect the dollars to strengthen, the euro to strengthen, the Canadian dollar to strengthen, the Aussie and the Kiwi dollar to weaken, the Japanese yen to strengthen. If you're still confused about how to use the higher versus the lower time frames or when to enter the market, considering the overall market trends. If you haven't yet, make sure to attend one of my online trainings. There should be a registration link either below this video or to the sides. Otherwise, just go to system.tomorrowintrading.com. Make sure to share, like, +1, comment on this video so that more people can get to see it. Take care. Good trading.